everything that glitters is not gold. It's only gold that is glittering right now because you've hit the 1 lakh per 10-gram mark. What's interesting from here on is whether this is a time to still buy. Are you going to see further upside, or is this the time to stay put? Is the question. Joining us on the show is Kishore Narne, Director, Head Commodity and Currency at Motilal Oswal Financial Services. Kishore, good afternoon and welcome to the show. My first question coming to you is 1 lakh per 10 grams. What is this telling you with regards to the story with gold? Because, you know, the average anticipation is that gold and markets always have an inverse relationship. Multiple times where this has gone wrong.
Yeah, good morning. I think this relationship between markets and gold has disconnected almost a decade ago, actually. Post Lehman crisis and post European crisis, I think when liquidity was the primary driver for most of the asset classes, so all the asset classes tend to lose these correlations between each other, and the historical correlations are no more applicable. So coming to the current situation, uh, uh, I think the world is looking for safety across the board, and the primary safe haven for the world at any crisis has been the dollar for quite some time. And when the confidence in dollar itself is shaken, the only alternative at this point of time available as a safe haven asset is gold. So there is no other safe haven at this point of time. Probably some of the Asian countries have Japanese yen still commanding that position, but as investors and funds stumble for safe havens, the only available instrument today is gold. So that's what is getting reflected in prices. Uh, the surprising factor is the speed, but not the direction. Direction has been predicted for quite some time. We've been bullish on gold for quite some time. We still remain bullish even at these levels, not ruling out any corrections, but at the same time, the direction towards 4,000 is on in dollar terms, which will take Indian prices close to around 1 lakh 20, 1 lakh 25,000, depending on where the rupee stands. So the direction remains the same. The surprising factor is the speed at which the gold is moving right now, which is showing the panic in the global market. Panic if the global leader in the asset classes, which is the dollar, has been questioned. So that's what is getting reflected in the price.
Right. Kishore, hi, welcome to the show, Varsha this side. So now you said that you being bullish on gold. Now, can new money be invested? Because every time we hear that, buy gold on dips, but that dip never comes.
Varsha, I think dips keep coming, so people miss the dips quite a bit, because when the dip comes, people actually turn bearish. That's applicable for most of the asset classes, including equities. Also, when actual dips comes, people run away from those dips. The problem is always at an all-time high. People tend to see that should I be investing my new money into this? Of course, it has to be done with a word of caution. There is absolutely a high possibility that you can see corrections ranging from 5 to 10% at any point of time. The kind of volatility we are seeing in the markets, across the markets, not only gold, but across the markets, the volatility is significantly higher. So 5-10% move here and there should not shake you up. So if you are that kind of an investor who are looking for 18 to 24 months in time frame, I don't think it is too risky. But of course, you should be putting a part of your new money and waiting for a dip. Probably tactically it should come at some point of time. So that's where you should grab more. But if you have, but gold is not a new investment. Every time, all the asset managers, all the wealth managers suggest you should have gold in your portfolio. The range of the that allocation can range from 15 to 15%, so 5 to 15%, 20%, depending on your age and risk profile, etc., etc. So the money which already you have in gold, just sit tight on that. That's what we are saying. Hold on to your investments, hold on to gold. New money, absolutely you have to start with caution.
You know, interesting point. Hold on, everyone understands. New money is what is actually wanting to find its way in terms of investments. So if you say that there is a possibility of a near-term dip that could be coming in, and if you're saying tread with caution, what are those levels one should be watching out for in terms of making their investments?
Rather than levels, I will be seeing that what triggers which should trigger this correction. So if there is any turnaround in Trump's policy, either even in the softness of the policy, or if there are negotiations with China, so if China and US comes on the table and start talking, I think that will trigger this correction. So the corrections could range from 5 to 7%, 8%. So 5% is something around 4,000, 5,000 rupees at current levels. So the worst come possibility is around 80 to 83,000 levels, which is right around 10, 15,000, which is 10% from here. 10% will bring you to 82,000. But anticipation of this dip, before that, if it goes to 100 1,10,000, and then from there it falls by 10,000, you'll be at the same levels. So I don't really have any clue whether Trump will call for trade talks, or what kind of this news flow happens tomorrow or day after, or maybe in the short term. So that's what the ambiguity of this market is today. But the direction remains bullish. So you may get or you may not get the corrections. But the trigger for the correction is any softness or turnaround in the policy, which I am not predicting at this point of time. I'm not anticipating any softness in the policy. And whatever happened between Powell and Trump is also triggering more and more agitated markets. So I think the turnaround is not visible. If it happens, there will be a correction.
Got it. Well, Kishore, so one more question on when it comes to gold ETFs. What's your view on that?
It's absolutely same. It's just an instrument. So view on gold is and ETF is absolutely same.
And also, silver is also at, near 12-year high. So now gold versus silver, where the opportunity lies.
See, for the last couple of years, most of the analysts have been predicting silver has been underperforming. It has to do a catch up. Silver is more bullish than gold. But unfortunately, these two are paired together. Traditionally, they are two precious metals. But off late, especially last decade or so, silver has leaned slightly more towards an industrial metal than a precious metal. And the concentration of value in gold, as the gold increases its value more and more, the ability and ease of holding large amount of wealth in the form of gold, and the protection it offers to your purchasing power, cannot be done by silver at the same time. And silver's lineage into the non-ferrous and industrial metal side actually also triggers some kind of weakness, because as we anticipate, there could be US triggered recession, slowdown. China also could suffer from that. And so global growth is going to slow down. In that case, if the industrial growth is going to slow down, the industrial metals will be suffering from that. And silver can actually take a hit from that. So that's why silver continue to be an underperformer at this point of time. I don't see a big turnaround at this point of time in that equation. So gold will be a front runner in both of these metals, but silver is not far behind, but will be an underperformer. If the economy turns around, silver will outperform gold. So the thing is, if the industrial growth and global economy does well, silver will beat gold. But if the global economy growth is at the question, so then the gold will be a preferred metal.
Right, so gold could be a preferred metal as well from here on. So that's an interesting take with regards to what could be in store for gold and silver. Thank you, Kishore, so much for joining us on the show and sharing your views. So that's a quick conversation that we've had on gold. Vinay, just a quick question. If you're tracking the charts in terms of gold and silver, what are your levels indicating?
So basically, going by the international US gold in 2022, international gold, US gold was placed at 1600. Now it is around 3500. So gone double in 2.5 years. So significant returns have been generated by this asset class. And I think this is into the breakout was there when it crossed the 2050 odd level. $2050. So that was a breakout level, multi-month high, multi-top breakout was there in the gold when it crossed $2050 in the year 2023. And after that, we have seen that it has reached to $3500. So after breakout, it has gone up like anything, and now it is into a overbought scenario. I don't think this is the right time to invest into gold. Whatever negatives were to come, it has already come out. The tariff wars, which was announced on in the beginning of the April, it has already been discounted. So in the smart investors has been actually accumulating gold since mid 2022 in anticipation that this can happen. This uncertainty in the economy may emerge in the future time, and that has already been it has already been discounted now. So I don't think this is right time to invest in gold. One should wait for the major corrections, then only one should look into it. And as far as silver is concerned, yes, silver as an industrial metal, I see some opportunity. The ratio charts are suggesting that the silver should outperform the gold from here, being a part of industrial metal also. So I am of the opinion that silver ETFs and silver as a asset class can be a right place to start investing, and accumulating ETFs is the right strategy for the investment in the commodities.
Right. So that's with regards to where a technical view coming in on silver as well as gold.